Hi everyone, it's July 19, 2021, and you're watching me, Nikki Yu, also known as Spaces Trader for the Awesome10X Global Market Update. So we've been saying last Friday in our free class that it's the bear show. Nasdaq is peaking at 15,000. You have to watch out for the next week or next few days to months on how low. Maybe we're seeing a 5 to 10% correction in the market. So far, the market indeed fell. So let me show you a few things that I've been doing in my eToro account first. So in my eToro account, I had no choice but actually to short the market. So I shorted Nasdaq 100 at 14,863. I'm looking for Nasdaq to bottom out about 14,600 and 14,200 as the first two targets. So we're seeing already a continuous sell-off. Trade desk continues also fall. Also shorted DocuSign and Shopify. With Sundial, Agora, Alibaba, Pintuoto, Hexo, Doyu, Space, although I don't see them going up, I would just cost average that within the next 2 months. Not yet today, but what I plan to do is actually to also continue shorting. So you're seeing that I've already set up and lined up many more short positions for this week. Shorting Twilio, Enphase, NRGU is related to the oil and oil related businesses. So selling Chevron, selling Live Nation, selling Just Eat Takeaways, selling Upwork, selling semiconductor bullish leverage, which is really tied up to the entire NVIDIA, AMD, cloud computing related names. So you're seeing that the markets nowadays are still in a bearish mode. And you could see that even your cryptocurrencies are still in a bearish mode. So the entire market so far, we're seeing actually more of a sell-off, and only these few names are really strong. These few names are your utility sector. It continues to go higher. Your XLP, aka your consumer staples, is also going higher, which means that the market is so defensive in that they're just buying utilities and consumer staples. Let me show to you as well. The inverse charts will really show your true bias. So stock market goes up and down, and some people get frightened away when the roller coaster ride goes down. But the truth is, if you can just inverse your charts and see what it looks like, shorting is similar to going long. It's just that you have to reverse your tactics, okay? So for instance, with the trade desk, if you just simply go 1 over TTD, you will eliminate your bias by seeing that the trade desk is actually on a potential downside of at least 10%, such that shorting the trade desk just makes sense. Your risk is very low here, and then your reward is still very high here. If you do the reverse, that means that you should be shorting the trade desk. Take a look at Virgin Galactic. Virgin Galactic, however, if you shorted about $50 above, good for you, because right now it's trading at $30 and you're already correct. However, when Virgin Galactic hits $25 to $22 sometime this week, you will meet a first resistance, or in this case, it's going to be the first support, because this is the inverse of Virgin Galactic. So basically, it's as if you're investing in Henry Ford when Henry Ford first showed the first internal combustion engine, or for the Wright brothers who first showed their first Wright brothers flying their first version of an airplane. Or it's as if you were investing in Elon Musk when he first unveiled the Tesla Model 3 or Tesla Model S during the time in 2013. So investing in innovation really has that up and down. You have to understand that every rally of space, Virgin Galactic, of course, tomorrow is going to be Jeff Bezos flying in Blue Shepard. You could see that there could be some people profit taking in this case because they shorted SPCE. They'll be covering. So it's the inverse. Profit taking will mean that space SPCE will actually rise tonight, in which case it will pull back here on the shorts and then continuous. So what you want to see for those who have SPC or space related names is to actually look for short selling opportunities within this week or within this month on any rally, on the hopes that space barons are gonna have proof and validity that NASA indeed is going to give them contracts for the entire space tourism, space exploration, and all the infrastructure for space. Let it be SPCE, ASTS, Maxar, and so forth. Now, notice as well that if you do the inverse, you could see simply that DOU has been, in this case, because this is the inverse, you would see a parabolic move on the upside. That means that if this were you doing along, you would have been shorting for a long time already since March, April, June, July. Right now in July, you could see that the parabolic move of DOU has already been rising way too much, in the sense that that means that those people who were short selling DOU have been actually so majestically in the money already that it doesn't make sense to continue shorting DOU. So when you see inverse charts, it actually helps you eliminate your bias and to see what exactly is the market telling you. And not every stock is actually in a short setup, because some stocks have already gone down way too fast. In this case, because this is the inverse, it has gone parabolic to the upside for DOU because this is an inverse, right? So it means that the DOU chart in itself is already parabolic to the downside, which means that at 4.5 and any price lower for DOU is not really a recipe for shorting further. Now, take a look what happened in Oatly. These are your IPOs, and you're seeing that shorts are really gradually continuing to add on their shorts on Oatly. So for those who have Oatly positions, what you'll see is that any pullbacks on this chart means that any rallies for Oatly to go $22 is actually your chance to continue shorting your Oatly. Because this is actually the inverse. What you're seeing in my charts are the inverse. This is 1 versus Oatly. 1 over Oatly will actually show to you that if the bias here is upward, that means that the market is actually selling off Oatly with two reasons. You've got Spruce Point saying that there's greenwashing and mind control on Oatly about the benefits of how they're really helping people in their alternative milk. And then and also how they're contributing to a less carbon emission world, as well as people really now adopting many alternative milk brands, not just Oatly. So with competition, usually in a sector, you will see people have many alternatives, just like how Beyond Meat is actually becoming more commoditized. You've got Impossible Foods, you've got Nestle, you've got Corn, you've got Kellogg's brand, Conagra Foods brand. So it tells you that there are many competition in the space. Now, Ashford, just take a look at this. Ashford is changing their ticker. They're doing a reverse split this Monday. And so all the $1.80 is going to be $18. If you have Ashford shares, you'll see actually that it's reversing split today. And notice that the people who shorted Ashford are so much in the money that it makes sense that tonight you might see people covering. Let's assume that this was you, Ashford, going long here. Wouldn't you take profits if Ashford went from 20 cents to 60 cents or almost a 300% pop? So in that light, that means that you're actually going to cover, if you're going to cover your Ashford shares, if you shorted it, you will see a lot of buyers at 170 below for Ashford Hospitality Trust. And $1.70 somewhere at $17 to $20 tonight. SoFi, you're seeing as well that it's very near their current resistance. This 1 over SoFi, that means that it's very near their supports. Therefore, if SoFi actually trades at about $12 tonight, you will see that the market is going to buy SoFi. You should be looking at these over parabolic moves of to the downside of SoFi, really as an opportunity to see whether there will be people already covering their shorts. Take note, though, the difference between momentum of parabolic to the downside moves of DOU, Ashford, Space, or SoFi versus the general uptrend of 1 over 998. 9988 is Alibaba. So look at this. When you're actually scared, you see in the news that Chinese stocks getting pummeled down, and then Alibaba and Tencent are opening up their ecosystem that should benefit Alibaba, and yet the market is really selling it off further. What you should understand is that Alibaba has been in a downtrend since October, November last year, ever since the Ant Financial IPO didn't actually pull through. So technically speaking, this bear market in Alibaba, or if and since you're looking right now in the inverse chart of Alibaba, you're seeing that this uptrend of Alibaba's inverse is actually happening already for almost 7, 8 months. It tells you that you are less likely to actually do parabolic moves, seeing how Alibaba has actually a resistance here. In terms of like an uptrend, it has a resistance here. And so you will see like for Alibaba shares to really have a buyer somewhere in the 200 Hong Kong dollar or 190 Hong Kong. So therefore, from a shorting perspective, Alibaba or Chinese stocks do not have that momentum in case that you're doing a short selling move. Take note too that if you're wondering if Apple will continually go extend up from 148 to $160, notice that for the first time in over 12 months, we are seeing that Apple is showing this potential bottoming out. Because this is the inverse, a potential bottoming out of the inverse Apple means that it's topping out at 148, 150, or even on the likes of 160. This is the reason why NASDAQ started to crumble last Friday. Take a look at Enphase if you're still not yet ready to short your Enphase. Even if we said so last Thursday and last Friday, notice that if you just simply inverse the chart, it will eliminate your bias. Notice that Enphase around January, February has been topping out here at about $200. And therefore, this inverse chart of Enphase is just really a continuation of that sell-off, in which case your first resistance is May, or in the case of a short selling support, that means that your first cover or your first target when you're shorting Enphase is somewhere in the May lows of about $125. So that's really how you should interpret those inverse related moves. Take a look as well with Sunrun. It has been in a perennial downtrend since January, February, which tells you that Sunrun has stopped at $80, $90 and still continuing that front to the downside. So Sunrun, can it go $40? We argue that it's a yes. It will be similar to your July and your May supports. So that would be your first resistance in your when you're doing an inverse. I want you to see the inverse so that you don't really get afraid when you're short selling these likes. So many people when they're looking at the chart in the short side, they can't see it because they're very biased on the long side. That's why I had to show to you the inverse so that you see where is Sunrun support. The real support of Sunrun is still as low as $24. So if you're shorting Sunrun at 47, 48, if you could see a downside of at least 38, from 48 to 38 or even as low as 30 or 24, it will actually negate all of your bullish sides and it will eliminate that bias that you are thinking just because you believe in the solar sector. So I think that is helpful to help you eliminate your bias. And when you do that, I'll show to you more short ideas. So so take a look here. Shopify, many people love Shopify, us included, but just do an inverse to see that Shopify has double topped. Or if you're looking at the inverse of Shopify, it has made a double top at $15, which means that it has to go first to the downside. So here is Shopify, everyone's favorite. A downside move of Shopify could lead it to as low as 1112 or 13. When you see that very clearly, it eliminates that fear that people have that they say, Nikki, I don't know how to short. What's shorting like? Shorting is really just the inverse of going long. If you're familiar with going long Shopify, to eliminate that short, when you see a chart like this on Shopify, doesn't it make you buy Shopify? Well, because this is the inverse. Buying an inverse of Shopify is essentially agreeing with me that Shopify has to be sold down. So we were saying that the risks of the market has to do with 6 reasons. The Delta variant COVID risk, even if it's not fatal, it's still gonna presumably affect your retailers. In which case, I took a look already on many retailers. Steve Madden Shoe Company looks to be shorted here at $40 to $42. Take note as well, Urban Outfitters also showing a definitive sell-off here at $37, $38. Take a big look at Abercrombie and Fitch as well. Some downtrend moves here at $40 to $42. How about American Eagle? outfitters also showing a short. So your retailers in general are showing some sense of stalling out. How about those dining outside? You could see Brinkers International with ticker symbol EAT getting sold down here at 65 and $58. You could see Dine Brands, which is the founder of IHOP and Applebee's, also getting sold down. These are your casual restaurants getting another difficulty as well. Cheesecake Factory also getting a sell off. So what you're clearly seeing here is that restaurants and retailers are again having a hard problem. That means your concerts, which was expected to do well already, is already getting a sell off yet again. Live Nation Entertainment, another short idea. What about great companies? I know people are saying there are companies that are so great, and yet what's happening with them? We are seeing that Cloudflare is starting to show a sell-off. NVIDIA, of course, we started shorting last week, and so far so good. From $800 falling 720, a 10% drop, and could fall yet again. So you are really seeing already a sell-off on the valuations. It happened on Coupang Software, happened in Coupa Software, so strong sell-offs. This week is gonna be earnings week. However, I'll show to you that this week is gonna be more of a sell on any good news type of deals. I'm gonna show to you this week's earnings front. So you're seeing Tractor Supply on Monday, IBM, first bank. We already saw banks sell off last week, and even the likes of restaurants. So I'm sure people love Chipotle, but you might be surprised that this week is gonna be a sell on good news, even if Chipotle Mexican Grill will show really good numbers. So do not actually be bullish this week or this entire month in general. To eliminate your bias, just do an inverse. So do a 1 over CMG. Take note, if this was 1 over CMG, wouldn't you actually buy that chart for CMG? Which means that you will actually preferably short Chipotle Mexican Grill tonight at $16. So CMG, now take note, even if you're doing a short, you should be doing it in the realm of just 10% to cover it already. So you're not really doing a long-term short here. These are all tactical shorts. So you're just selling it in the reasons because number one, the market has extended to the upside for quite some long time on this reopening trend. So the reopening themes are now actually breaking down, whether it be restaurants, whether it be airline sector, and most especially, of course, your cruise line. Take a look at what's happening in your Norwegian Cruise Line, a definitive short selling motion. Could see this is a continuous sell-off because nobody's gonna ride your or the market is of the belief that we will still continually not have a cruise line vacation move, no? So this movement is actually more of a short sell for Norwegian Cruise Line. Could see the same thing for your Royal Caribbean RCL, also a short move. You could also see the same thing happening in Norwegian Cruise Line, your Carnival Cruise Lines, Carnival Corporation also on a sell-off. So definitely we are seeing this ongoing reopening theme actually being a definitive sell-off. So what I could really see is that growth stocks will continually sell off. And people are very much holding on to their large caps, but we're already seeing weakness already in the large caps, whether that be Roku, which was really being sold off last week from $450 all the way to $400. We do see another sell of another 10%. Not necessarily happening this week. Of course, it can rally 420, 430, but we would assume that those rallies are really just more of a selling off further. So which means that you shouldn't be afraid of shorting your Twilio here about $375 or $380. Continually short that Twilio, continually short your Elastic, no matter how much you like it. Continually short your Avalaras. And really, the IPOs are in a definitive mess. You're seeing Too Simple go down. Any rallies of Too Simple is going to be sold down. Electric vehicles, even your Tesla, no matter how good their full self-driving, we are seeing a sell of about 5 to 6% or 10% for your Teslas. Okay, so let me take a look on any commentary. Should we concentrate more on renewables like sun power or EV charging stations? In general, the solar ETF is on a sell-off brink. Like sun power is expected to fall down to as low as $20. So this was a recovery rally from about 20 to 32, and this is a drop. And actually, that 20 can even go to 16. So notice that sun power is on the downside. Any rally of sun power is expected to sell off. Your TAN sector, which is your Invesco Solar ETF, is actually on a downside move. We are recommending shorting the solar ETFs. In fact, our highly recommended short was Enphase. So Enphase is a short. In the short term, sun power, Sunrun is gonna perhaps sell down. And to eliminate your bias in the short term, just do an inverse. Take note that sun power is actually in a move to the downside of at least 30% down. So expect charging stations to actually fall. The biggest risk in EV charging stations, your charge point will continually fall. Expect charge point, it's been falling already, and we're recommending that it will be falling further. So any rallies of charge point is to be sold down further and further. Sam is asking, is the market an oversold stage? No, we see and expect further selling. So we expect another 10 to 20% downside move in the market. You should be in full on short mode if you want to be very much in the green side this month and even on August. You want to watch our classes last Friday. However, in case you have companies that are deeply oversold, like as I said a while ago, Doyu, Virgin Galactic, Ashford, some cannabis names are really already oversold. Those are not to be sold. So example, our charge point here at $23. Although the momentum is on the downside to $17 or $18, I would actually wait about 25 to short this, because it's already been, as you can see, this is already doing a V-shaped rally. If you're seeing the inverse do a V-shaped rally, that means that your charge point will actually already get a bottom here at $19 or $18. So it's very near the support already. If it's very near the support, you shouldn't short it. But if it's near the resistance, like where your Shopify is, you should expect Shopify to continually fall this week. Even your likes of CrowdStrike, people are saying, oh, they like cybersecurity. Note that CrowdStrike can also fall to about $230 this week. So I just really expect an entire sell-off, entire blood to be spilled the entire week. Now people will get scared, but this is really to eliminate your bias. As I said, simply do an inverse and then you will see where the market's really going. The three-headed monsters that you could see for energy stocks, ExxonMobil, Chevron going down. This is ExxonMobil showing a sell-off at $60. Chevron seeing a breakdown at $102. Can see these stocks go $84. Your big oil index is showing off a sell-off from 190 all the way to 117. Any rallies of Energy Yu is a definitive short move. Urban Outfitters. So you're seeing really a continuous sell-off in the Gap, Levi's, Royal Caribbean Cruises. So really, we should be in the short mode. World Wrestling Entertainment, a short mode. We have a lot of sell-offs to do within this month. Wingstop, a sell-off. Upwork, a sell-off. So Papa John's, Party City, also a sell. We are seeing, guys, continuous red days. And I would say that everyone who's not short is of the risk of incurring more drawdowns for the next week or next few days. Okay, so I hope that you guys are aware of the market situation. We've got inflation persisting, persistent Delta variant. Even if it's not fatal, if you're vaccinated, you should be aware that it could cause more lockdown pressures. It could cause less people going out. Of course, your rising dollar is still a threat. We are seeing actually even the inflation persisting 4% to 5% in the next 4 years, which will make the Fed increase interest rates. That's what the market is pricing in nowadays. And with the rising interest rates coming in the next 2022 or 2023, everybody's already positioning that. That's why the market is gonna likely 99% chance sell off. Okay, so now that you know to expect bad nights, do what you have to do. So some people are saying my account is just cash only. How do we apply for us to be able to trade as a short account? There's what we call inverse ETFs. So SOXS is actually the inverse of SOXL. So this will rise if the market on NVIDIA and AMD will sell off. So this will rise, SOXS. This is a direction bear. You've got the SQQQs, which is, of course, an ultra short on your QQQs. It's already been starting to rise since Friday and Thursday. So that's one way to actually do a short in the market if you don't know how to short. Cash only markets can still short. Just do a negative. I'm pretty sure that even if you're using an IBKR, just click sell SOXL, click sell Energy U, click sell Shopify. It will already allow you. All IBKR accounts are already able to short. All eToro accounts can also short. Everyone who has a US market account can short. So you don't need to be a margin account to short. You can actually short it even if it's a cash account. Okay, that's it. Thank you very much for watching and hope that you have an awesome 10X. Prepare yourself for bad nights. Make money on a red night. Thank you. Bye-bye.